Last week we saw a plethora of important US economic data and the markets were a little bit fazed by it. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. Last week we had a couple of very important US inflation numbers. First of all, consumer price index. That came in above expectations, but nevertheless it fell for about the 7th consecutive month since it peaked back in June last year at 9.1%, now stands at plus 6.4%. That's the headline year-on-year rate. However, PPI, producer prices, the wholesale inflation numbers, they came in not only above expectations, but also higher than the previous month. That suggests that inflation still hasn't been quashed, despite the Federal Reserve having raised rates so aggressively, and not only raised rates aggressively so far, it intends to carry on raising rates. Now, that's been a tricky thing for the market to digest, but put this into the mix as well. We've also got an unemployment rate which is at a 54-year low, despite the fact that the Federal Reserve has raised rates from 0.25% back in March last year to 4.75% now, with an expectation of another 75 basis points of rate hikes, taking it up to 5.5% by June this year. We saw the S&P put in a terrific rally at the beginning of this year, up 10% in the first month or so. It's pulled back about 3% of that now, but still, the bulls will argue that's really quite resilient. The bears will say, hang on, investors are fooling themselves. They haven't really taken into account how serious the Federal Reserve is when it says that it's going to tighten further. So it's really all to play for and something to consider on US President's Day when US equities are shut, and we're going to have some trading breaks in the indices as well. Thank you very much for watching. I hope you found this helpful. If you did, please like and follow. And as always, best of luck with your trading. Goodbye.